Hello folks, today I want to talk about how Alibaba stock has now bottomed and looks set to double to more than $150. By the way, that's only my medium term target. In this video, I'll give you my short and long term dollar targets as well. So the 4 reasons why Alibaba will go higher are: Alibaba is engaging in investor-friendly capital initiatives like buybacks and cost cuts. Alibaba is not spinning off subsidiaries like Cloud and Cainiao, which is actually good for its valuation. The Chinese economy is recovering. And finally, Alibaba's stock has bottomed out technically, along with the Hong Kong stock market. Before we begin, most of you are not subscribed, so please hit the like and subscribe button to get instant updates when I post Alibaba videos. And also, I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. First, let's talk about capital initiatives that Alibaba's management has been undertaking to create shareholder value. There are 3 main initiatives: cost cutting, buybacks, and capital allocation. The first initiative, cost cutting, entails mainly layoffs, corporate restructuring, and undertaking operational improvements. I'm sure you're all aware of the layoffs that Alibaba has been conducting in recent years. Last year alone, Alibaba laid off 20,000 staff, or about 8% of its workforce. This has reduced staff costs and improved income, at least in the short term. It remains to be seen if they'll continue laying off staff this year, but I wouldn't be surprised if they do. Corporate restructuring is another way that Alibaba is tackling costs. At Lazada, which is an e-commerce platform in Southeast Asia that Alibaba owns, a corporate restructure was undertaken, which moved managerial decisions from China out to the regions where Lazada operates. So from a centralized chain of command, they moved to a more agile, country-specific mode of command. Whether or not this will bear fruit in terms of top line and bottom line growth remains to be seen, but at least they're trying something different. When it comes to operational improvements, this study shows that Alibaba has saved millions of dollars through things like integrated demand forecasting, inventory management, price optimization, and product recommendations. In the abstract, we find that these initiatives were done to Alibaba's retail operations, which I'm assuming is their e-commerce division, and there were $42 million saved in costs, $110 million in increased sales, and $13 million in increased profit. This doesn't sound like much, but remember, this is probably just the beginning and the gains are ongoing. Furthermore, if they start rolling out similar initiatives to Alibaba's other businesses like Cloud and Cainiao, then the savings could be substantially higher. The second action that Alibaba's management is taking to increase shareholder value is through buybacks. This is a favorite amongst value investors to boost the share price because it doesn't increase taxes for investors through dividend payments. So Alibaba recently upsized its buyback program to more than $35 billion through to March 2027. Each quarter, it looks like around $5 billion worth of shares are being bought back, which is about 2% of its market cap. This might sound small, but it all adds up over time, and the compounding effect of these buybacks will most definitely boost the share price. If it keeps going at this rate, it'll have bought back around 20% of its shares by this time in 2027. There is also the possibility that Alibaba increases these buybacks if the share price continues to languish and/or if it has excess cash. In effect, it's almost like the company is setting some sort of floor on its share price. Alibaba can afford to do this because it has little debt and is a huge cash cow. A final capital initiative that Alibaba is taking to boost its valuation is through capital allocation. According to CEO Eddie Wu, management is focusing on increasing profitability at core divisions such as cloud and e-commerce. I think this is a good focus area for management because if Alibaba can't get high revenue growth, it should be focusing on earnings. Now let's talk about the second reason why I think Alibaba's share price will rise, and that is failed spin-offs are good for Alibaba in the long run. Essentially, this comes down to Alibaba not selling its best assets at the bottom. At this point in time, the market is not ascribing a large valuation to Alibaba as a whole, so why would it ascribe a large valuation to its subsidiaries? The market wanted spin-offs to unlock value, but this never made any sense to me, doing so at the bottom, and I think it's good that they are not spinning off their high growth companies like Cainiao. It's the same as buying at the top and selling at the bottom. I think once the stock market gets euphoric and Alibaba is trading on a valuation of many multiples from now, then it would be a good time to divest some assets to unlock value. The third reason why I'm bullish on Alibaba is that the Chinese economy is recovering. Alibaba is essentially a play on the health of the Chinese Chinese economy. I mean, it's China's biggest e-commerce company, and although it's lost some market share due to rivals such as Pinduoduo, it's still a juggernaut, and when the Chinese economy starts to recover, which I believe is happening now, I think Alibaba's share price will also recover. Let me give you several reasons why I think the Chinese economy and therefore the Chinese consumer will thrive going forward. Everyone knows that China's housing sector is in the doldrums. However, the government is shifting investment into manufacturing to make up for the drag that housing is having on the rest of the economy. If you look at this chart, industrial and manufacturing production has bottomed out and is recovering strongly. Because China is still the world's factory, any boost to China's manufacturing sector should stimulate consumption through jobs and income. The final reason why Alibaba is going to recover is that Alibaba's stock has bottomed out technically, along with the Hong Kong stock market. So not only has Alibaba bottomed out, so has the Hong Kong stock index, of which Alibaba forms a large part. If you look at the MSCI China ETF, ticker symbol MCHI, Alibaba forms 8% of the total weight. So if money flows into the Chinese and Hong Kong markets, a lot of it will go to Alibaba. Anyway, let's take a look at Baba's chart. The last few months were a bit dicey, but Alibaba has actually recovered most of the losses over the last few days. By the way, this is the Hong Kong shares. I posted my initial video here, and of course the stock sold off straight after. But the key thing to note is that it never penetrated the previous low set back in January, and it also never penetrated the all-time low set in October back in 2022. So in effect, you could describe this as something like a triple bottom, or some variant of an inverted head and shoulders. Whatever it is, if the share price continues to rise from here, then clearly that's a bullish signal. If we zoom into the daily chart, the price is now well above my buy point at around $74. If it continues to show strength, I'll probably buy more. Alibaba has now cleared the 100-day EMA, which is the red line here, and over the next few months, I want to see the 100-day EMA cross over the 200-day EMA, which would be a further sign that the bottom is finally in. Furthermore, Alibaba has actually been outperforming the Nasdaq over the past month. I know a month is a very small time size, especially given that the Nasdaq has been thrashing Alibaba over the past few years in terms of performance, but this could be the start of a trend shift. So in summary, I'm bullish on Alibaba for four main reasons. Alibaba is engaging in investor-friendly capital initiatives like buybacks and cost cuts. Alibaba not spinning off subsidiaries like Cloud and Xiaonao is actually good for its valuation. The Chinese economy is recovering, and finally, Alibaba's stock has bottomed out technically, along with the Hong Kong stock market. Now, when it comes to price targets, my short-term target is $90, which could take less than 3 months to reach, and my medium-term target is $150, which might take until the end of the year. My long-term target is a bit more uncertain, but let's say it's $300 because that's the prior high. If Alibaba wants to get back to this prior high, it's going to need to do it through either strong earnings growth or multiple expansion, which is entirely possible in a huge bull market. However, this is likely to take 5+ years, if that. Anyway, these are just my speculative predictions and are in no way financial advice. So thanks for watching, and don't forget to hit the like and subscribe button for more Alibaba videos.